welcome back to Fintech Live London. With me today is Simon Forster. He is the market consultant,
Right, okay.
for Experian. Simon, can you just give us a little bit of an overview about your role within Experian?
Sure, of course, Joanna, great to be here. So my primary purpose is to provide market insight and best practice guidance across the verticals in which I support. What does that mean in reality? It's about identification of market trend, whether that be in terms of credit insight, behavioral insight, and payment performance insight. I then take that back into my clients and we apply it to the products and services we deliver so that they can deliver the best possible outcomes to their customer base.
Great. So today you focused on how lenders can manage risk and remain profitable within a volatile economy. And I really just wanted to ask you if there were any major trends that we should be watching out for within that sort of space.
Certainly. So I think we've for the last 6 to 9 months, we've been talking about how can you grow in a turbulent economy. The reality is the economy is now flashing red. There are warning indicators left, right, and centre, whether it be general inflationary pressure, energy, mortgage, and income not keeping pace. So we kind of firmly believe the economy is flashing red, but the credit market isn't. It's amber, and it's trending red, but it's amber. And the reason why we think it's amber is because pockets of value still exist. So we look to understand financial resilience of the UK market, and we do that by looking at a number of different metrics: our traditional credit score, susceptibility to unemployment, the amount of risk presented once energy prices increase, and that's not only now, but post-April, when the energy price guarantee will end for many. And we look at those who are due to exit a fixed rate on their mortgage. We look at the average mortgage value, and we think individuals are going to be paying approximately £288 a month when they roll off a fix and have to renegotiate, or they move to an SVR. And there's a significant number of consumers, about 2.5 million in that pot. So lots to be looking at. Lots of data in the market to help lenders and organizations identify customers, identify potential stress that allows them to manage that vulnerability, to trigger a conversation. Yeah. And we talked about forbearance and how organizations can be proactive and manage their customers through the crisis. But equally, pockets of value exist. Credit card applications continue to grow. Buy now, pay later, embedded finance. Products that are performing very well. They might be lower value in short term, but they are very popular with consumers. The growth is exponential. It's growing across all segments. So there is value there. And it's back to identifying what those good customers look like, understanding their preferences, their needs and wants, and then being able to tailor products and services accordingly.
So you mentioned there a little bit about sort of buy now, pay later, which is kind of a fairly new entrant to the lending space, and is now sort of undergoing sort of rigorous regulations. In terms of young people's spending and the younger generation, is it a positive thing or a negative thing? Because we do hear a lot of stories about, is it a financial time bomb for them?
And you shouldn't necessarily believe everything you read. Like all sectors, there will be pockets of risk, and they absolutely do exist. But we've looked at a lot of data. As you may be aware, we're looking to incorporate buy now, pay later payment performance data into our bureau, and it's surfacing some really valuable insights. So while initially users were your millennial and Gen X, it's becoming more mainstream. Yeah. And interestingly, those consumers who use buy now, pay later typically perform better than those who haven't. So yes, pockets of risk exist because of the rigorous assessment that's undertaken at the front end, and because of the relatively low value and nature of the product. It's something customers can manage, and it's easy. There is a place for a credit card, there always will be, but buy now, pay later offers fee-free and interest-free means of managing managing the load. So not only is it convenient in terms of the journey, and there are robust assessments that take place behind the scenes, its popularity is its ease of use. And as I said, there is risk out there, and absolutely the surfacing of the performance data into the bureau will help that. But the positive outcomes will far outweigh those. We see the thickening of credit file, an ability to repay constantly several smaller buy now pay later trades may be sufficient for a credit card issuer or a lender to offer a loan. That data didn't exist before. So yes, pockets of risk exist, but it's here to stay. Buy now, pay later, embedded finance. Consumers want choice, they want optionality, and they want the best deal for them at the checkout. They don't necessarily want to get the credit card out anymore or finance via a loan. They've got to apply for an advance. They want to be able to pay for the right product with the right vehicle at the right time.
So if we're going to sort of look at sort of the next 12 months or so within the lending space, what's your forecast for it, and what should lenders be watching out for?
So many things that I've touched upon, increased mortgage stress, not only mortgage, rental, we talk about mortgages an awful lot. Rental payments are climbing faster than mortgage, and it's those who typically rent who can be more vulnerable. So we shouldn't just focus upon mortgage and the mortgage risk. Rental needs to be considered also. But it's that cost of living squeeze. We talk about the reordering of risk. And we actually believe it's those in the middle that are going to be more susceptible. So it's those who are on a mid-range income who have historically been able to manage their budget and their finances very well, but certainly are not well positioned to accommodate the shock the inflationary pressures may bring. So if we think about increased energy cost, I'd say £2,000 a year, increase in mortgage or rent of £3,000, and income's not rising at the same rate, there's going to be a challenge. So it's about how lenders identify those stretched customers within their book, but also identify them at point of acquisition and ensure when they're running their affordability assessments, they're running it on the most up-to-date data, they're running it on where we are today, plus the forecast to ensure consumers don't run into difficulty down the line.
Okay, so it's all about managing the impact in a sensible and cohesive
it is.
way.
And look, credit is the lifeblood of the economy. We don't want to see providers drop from the market. Yes, there may be a small number of products, but it's really important organisations continue to lend, but equally, and probably more so, it's important that they lend responsibly. Because that's where individuals need the support, but it's got to be right. It's got to meet their circumstances. We talk about personalisation, and we talk about obtaining a greater level of understanding, whether that be through bureau, open banking, customer consented. It's about getting that 360 view and making the right decision, both for the lender and the customer themselves.
So, Simon, obviously you attend a lot of these events, and what are your key takeaways so far today? I know we've really only just kicked off, we're only into our third session, but what's your impression so far?
Well, we've just got going, but what strikes me is the volume of people that are here. Incredibly well attended, and just walking around the room, picking up some Q&A after my slot. It's the variety of organisations that you've got here. So, Fintech, as we know, covers a multitude of sins and can mean many different things to many different people. But it's the variety of organisations who are all here to learn and to grow and are looking to add value to their proposition. So that networking aspect is incredibly important. And I think that's what I'm going to take away from it.
That's great to hear. Thank you so much for attending today and being with us and having a chat. It's just great to have you here.
Thank you. Pleasure's all mine. Thank you.
Thank you very much. And we will be back shortly with more interviews for Fintech Live.
Thanks again.